Good morning, everybody. Jim Barrett from RJO Futures, Monday morning, August 19th. Well, last week when we spoke about this time, I thought there was a good possibility that notes and bonds had their highs in for the week. They started out higher Sunday night. Little I realized they'd go down the entire week and basically close on their lows. We had a big week last week, even though the news flow was was mixed. I guess what really freaked the market out was jobless claims falling to a 6-year low. But at the same time, housing starts and permits rose less than expected. Consumer confidence weakened. None of it could help the bonds. They just sank like a stone. More, I was going to say in slow motion, but more like a stone. The trend toward higher yields is alive and well as people basically bail out of positions that have been built up over years in the long end of the curve. By the way, the spread moved quite a bit also in that the long end, kind of paced the decline, and the spread, the yield curve is wider than it has been in a while. Will this be enough to make for a more two-sided trade this week, a more balanced trade this week? We'll see. We did start out a little lower. We're still a little lower. No surprise. News flow not quite as active this week. There's nothing till Wednesday, and which is existing home sales, and I believe it's not till Thursday that we get a Fed governor speaking, and I believe it's Fisher speaking to a group in Orlando. I mean, he's normally a bit hawkish. But it's summer. It's the last weekend of summer. We're kind of waiting for this Jackson Hole thing, although Jackson Hole ought to be a bit anticlimactic compared to past years. Obviously, Bernanke's not going to be there. A lot of the chiefs of central banks won't be there either. All right, we get some Treasury note, not refunding, but borrowing announcements later in the week. That comes on Thursday. But and the real driver may be equities. I mean, equities slipped. The bond notes and bonds fell so hard that it helped the equities slip last week. I mean, if the equities fall hard this week, maybe that'll offer a little bit of stabilization to the notes and bonds. However, equities are hanging in there this morning, so far this week. In other outside markets, grain's busy again. Weather, it's very dry in the corn and bean belt, and that's going to lead to an active month there. I can reach at 800-500-2461 to discuss any futures market. And remember, there is a risk of loss in futures trading, so it's not for everyone. Thank you.